Hello everyone. Today is April 13th, 6:43 in Kiev, and I'm starting an express Bitcoin analysis without any prior preparation. I woke up half an hour ago, only had time to wash my face. So let's start with the monthly candles. Let's see what we have here. On the monthly candles, you can see where the cursor is moving. We had a big red candle in February. Now we have two such insignificant candles. Everything happening in the Persian Gulf suggests that markets, especially stock markets, should go down. So we're getting a temporary delay through negotiations, more Trump promises, but overall it's pointing down towards the 50-month average around 58,700. Yes, there's already strong overselling, but overselling itself isn't a guarantee of growth. We don't have a reversal of this indicator from bottom to top. For now, the trend is clearly downward, and just looking at the candles, a move toward $58,000 seems likely. Weekly candles. Notice here that despite 2 weeks of prior growth, the downward trend continues. However, the momentum of the overbought, oversold indicator is pointing upward. A strong mathematical growth target has formed around $78,500, $81,500. And there's a chance we might actually reach that level. Especially since this mathematical target zone, this blue curve moving toward the price, roughly coincides with the base of the February candle. I've moved the cursor on the monthly time frame, and it's possible to hit the short seller's stops and then drop like a stone. So, based on the weekly time frame, our priority is still around $78,500 or even $80,000. Well, on the upside. Let's look at the daily time frame. What's here? Here, growth seems to be starting. We're seeing a breakout from this range notice, which was marked by a single candle on February 6th. But nevertheless, yesterday's candle closed with an engulfing of the growth. I'll zoom in so you can see it better. Engulfing 3 days of growth at once, which really is not bullish at all, right? We have a reversal, a clear reversal on the overbought, oversold indicator, which now suggests that the daily trend is likely to be downward from here. So both the bearish engulfing and the indicator reversal, well, much suggests we could revisit the 50-day moving average around $69,000. And here we have this gray untraded zone. Or is that not the gray one? No, it's the pink zone of the mathematical downside target. But that doesn't change the essence, right? So there are chances. On the other hand, it's possible that stop losses were just triggered, right? And we've tested the base of the flat zone and will continue higher. But I emphasize there's currently no reason to buy from the perspective of the daily candles. The trend here is clearly pointing downwards. Right here and right now. 12-hour candles. I'm moving the chart so you can better see what I'm talking about. On the 12-hour candles, the PP overbought, oversold indicator momentum is pointing down and clearly favors a decline. We also have a bearish engulfing pattern here, red candles. Yes, the current candle might close green, but notice it has a very small body. And we have, I honestly don't remember if there were or are downside targets. I don't recall if they form on the current or previous candle. But anyway, here's the orange target. So if orange is the target, then its upper boundary here is 69,890, and the candle low was 7,615. So we didn't reach it at all. It's just that the gray zone overlaps with the candle wick here, so it's not very clear if it hit or not. It didn't. So both the orange and pink zones remain as zones, well, targets. And again, 69,800 at the very least. There. So here too, it's still favoring the downside. And from a moving average perspective, this low is around 69,000, 69,200. 4-hour candles. Notice here, there were two upside targets. They've been met, but we still have a third one. This is a strong mathematical target, and it lies in the $70,100 area, 69,700, right? And there's a chance, again, based on the daily and 12-hour candles, that we'll still get there. Although the 4-hour candles are heavily oversold and a reversal is overdue here, it's expected but not yet formed. And where to? Well, a reversal towards Friday's CME close, which is $73,600. Right, but so far we don't see any reversal on the chart. Also, well, accordingly, we have a priority towards the 100 period at 69,800 and potentially the 200. Oh wait, that's the 200 period one. It's that sort of ambiguous orange color. I should even edit the color here just a second, make it a more distinct orange because like this, and right here like this. So otherwise it looks a bit brownish. There. So we could even reach the 100 period area around 68,900 if not lower, but lower is tough because of strong overselling on the 4-hour chart. Hourly candles. Notice that despite all of this drop, we have strong overbuying, right? Let's take this arrow, change it to red, and it indicates a continuation of the decline, well, more likely. Which overall fits the concept of hitting this target on the 4-hour chart around 70,000 minus, say, 69,800, somewhere around there. And from there, it's quite possible the hourly candles will become oversold and the 4-hour ones will be oversold too. This will be a synchronized overselling which will allow for an upward move. As for how far up, we said 73,600 to close the CME gap and potentially hit the target on the weekly chart. That's around 78,000. But in any case, in the medium or long term, we should see a decline to the $58,000 area if not lower. Right here to the 100-month average. And that's the $40,000 area minus. This review was for the private channel. Love and hugs to everyone. I'll provide further charts on Telegram.